Hello, everybody, and welcome to another edition of Hawk's Scan Sentry Report. I am Hawk Arps, Vice President of Jan Arps Traders Toolbox, and this is the Scan Sentry Report for the week. Actually, this is a midweek report, and this is going to be for July 25th, which is tomorrow. Let's take a look at some charts and see what these exciting markets have to show us this evening. Let's start by taking a quick look at our ESignal Watchlist, where we have all kinds of ETFs relative to the SPY plotted with our Scan Sentry tools, the Triple Trender Scan Sentry tool, the Radar 3 Scan Sentry, Trend Exhaustion 1, Overbought, Oversold, Fear Greed, Radar 1, etc., etc. And with this tool, we're looking to see what ETFs are stronger and what ETFs are weaker than the SPY, and which ones are strengthening and weakening. And what I see here when we look at the relative indexes is that the Russell is still leading the SPY with a strong score of 6 in the TTB Triple Trender, and a strong Radar 3 reading and bullish Fear Greed relative to the SPY. So the Russell's doing well, the Dow and the Nasdaq are not doing quite as well as the S&P. As we look at the specific sectors, we can see that biotech is doing quite well relative to the SPY, but home building is not as strong as people would have you believe, at least relative to the S&P. As always, financials seem to be succeeding no matter what kind of market we're in. Industrials are relatively strong. However, XLP, consumer staples, is showing a lot of weakness relative to the SPY. And we see materials, metals and mining, actually looking quite strong relative to the SPY. So that bodes well for gold. Looking at some of the other ETFs, of course, oil is doing quite well. This has been a great week for trading oil. Been my favorite market this week, and looks like the bonds are not nearly as strong as the S&P, meaning confirming that we're in this bullish market. Looking at some of the regional ETFs, things are strengthening relative to the S&P. Looks like there is some money flowing into the rest of the world now. In particular, I see EWW looking strong. That would be Mexico. Everything's looking good about that. Even the normalized Fear Greed is looking pretty good there. Radar 3, all of these looking good. And of course, the GDX relative to the gold is looking quite strong, which also bodes well for gold. Well, let's take a look at a couple of the actual indexes and instruments and see how their charts look. Here's a quick look at the Russell, which we mentioned was the strongest of the American indexes, and you can see how strong it is here. Triple Trender is bullish, Radar 3 is bullish, Fear Greed is quite strong, no divergences showing there. About 2 weeks ago we had a nice breakout from the trend line there, which was horizontal due to the fact that we were already making higher highs. So, we may see a pullback to this 1005 level, but all in all, this looks quite strong. Here we see the S&P daily. You can see it hasn't been quite as strong as the Russell. It's not making these new highs quite as aggressively as the Russell. It did break out of the previous high, and it's testing that level now, but it is not rushing forward, although with no divergences to show, and we've pulled back to this support line, I wouldn't be surprised to see it follow the Russell up at this point and continue this bullish move. Let's take a look at a shorter term intraday chart. Many of you know I prefer volume charts. This is a 50,000 share chart of the S&P, and it is giving us some interesting information. I see one, we have pulled back to this line here of support, and at this point I see a nice oversold buy signal there and a pivot divergence from the auto divergence finder. And here's a nice divergence here in the radar 1 fear greed indicator, making higher lows when the price made lower lows. However, on one of the most recent bars, we do see a pullback 23 setting up. That's what this little dot is here, saying watch out, we could see some more downward move from this pullback 23 to the downside. So I am looking for a short-term move to the downside, maybe as low as 1677, or testing that level again, before eventually taking a longer-term position to the upside. I want to show you for a minute how I scan for equities. As many of you know, I like to often hedge my bets and have trades set up in both directions, so whichever way the market goes, I can be going with it. However, the strength of the trade in each direction gives me a better chance of success. So I decided that this week I was looking for a bullish trend line breakout, something that would be moving up from a trend line breakout. So for a bullish trade, I took my TTB trend line signals tool and sorted on bars ago, and you can see all of these different signals I got. The light green ones are bullish breakouts, these are bearish pullbacks, these are bullish pullbacks, and there's one that I found that had a bullish breakout on this bar that I was quite interested in, and that was LLY. Okay, here is the LLY chart linked to the spreadsheet application there. And as you can see, we got this nice breakout of the downtrend line. You can see a little BO right there where this bar broke out. Just that was preceded by a sweet pea divergence. We had a deep dip double divergence right here at the bottom of this move, combined with a pivot divergence from the auto divergence and a nice oversold from the trend exhaustion 1. So I see also that with this breakaway move from the downtrend line, we've also now broken through all three bearish trenders on the same move. And to make things even better, I like the fact that after this down move we had this beautiful bullish pivot divergence in the radar 1 fear greed indicator. So this is a stock that I'm looking for as a buy opportunity. In fact, I might just buy it tomorrow morning. Eli Lilly. Many of you know that I like a setup which I call trend exhaustion 1, 2, 3, which looks for combinations of trend exhaustion 1 overbought, oversold signals synchronized with a pullback 23, and these often show me pullback divergences. So for my bearish trade today, I'm going to look for a trend exhaustion 1, 2, 3 by sorting here on the bars ago of the pullback 23 and looking for a bearish signal that coincides with the trend exhaustion 1 bearish signal here. And it's a nice pullback signal, just the way I like it. So let's look at Covington. Okay, here's the chart for Covidian, and look at this. It identified a nice one. You can see we got a trend divergence in the auto divergence finder coinciding with this overbought sell signal from trend exhaustion 1 and pullback 23 to the downside. And just to make matters a little bit sweeter, through this move to the upside, we filled this gap. We're here at this support and resistance level at 60.81. So this looks to me like a nice sell opportunity. Look how much selling strength there has been on this move down. There's no divergences or anything in radar 1. But we do get a nice pullback divergence from the auto div finder. So I'm going to be looking to sell short Covidian. Taking a quick look at gold, we mentioned as we were looking at our relative to the SPY watch list that things were looking good for the gold market in terms of some bullish strength. Here we see the daily chart. I do see that it's rising, and we're rising off of this bullish divergence from the radar 1 fear greed indicator, and at the bottom of that we did get a very nice oversold buy signal. However, as you can see, we are at this resistance level, not only from the down trend line from our automatic trend line tool, but also from our support and resistance tool. So you can see we're right here about 1322, which is where we were predicted we would find resistance, which sure enough we're finding resistance there. So we'll see what it takes to get through this level. In fact, let's take a look at an intraday chart. Okay, here's the 4181 share chart on gold, and it's telling us a little bit different story than the daily chart. As we're up here against resistance, you can see we've encountered a bullish divergence. As we made higher highs here, we didn't see quite as much buying going on in the fear greed indicator, so we see the prices dropped. Sellers have taken control on a shorter term basis, and this, we see the selling is exuberant. It's making lower lows in the oscillator, so I'm not seeing this as the end of the selling. I expect to see more selling, in fact, in the near term. It's quite bearish with the triple trender and the radar 3 trend strength indicator. So we're looking for this move to find its way down. Maybe 1298 looks like a pretty good support level. 1298, 1292, somewhere in there. Maybe we'll look for a buy opportunity at that point. One other thing I wanted to note is our wave counter here on this intraday chart has identified 5 waves. Wave 5 is up here. You can't quite see it. There's wave 5, and we're in the reversal 3-wave step. So that also concurs with our theory that we may see this continue down to finish that wave series. Well, the crude oil market has been quite tradable in the last week or two. Here's the daily chart, and as we can see, once it broke through this sideways congestion in late June, we've had a nice move up, and it has been quite bullish since then. However, we are seeing that it has made some highs, and we're getting a little bit of a divergence here in the radar 1 fear greed. Not quite as strong buying here at the top. We're seeing a pullback now to this support level at 104.17, and if it breaks through that support level, it could pull back as far as 99.88. So let's take a look at an intraday chart and see what the shorter term market looks like. Here we see the intraday chart, the 6500 share, and once we made our highs up here on the 19th of July, we have been making successively lower highs and lower lows, indicating that the short-term trend is now down. Of course, we could see that clearly with our radar 3 trend strength index, and our triple trender is showing us that it's in a downtrend as well. However, we do see some trend exhaustion signals here at the recent lows. I don't see any divergences at these lows. In fact, there's still quite a lot of selling strength here, and there is a pullback 23 bearish setting up on the current bar. So I would not be surprised to see it break through this support at 104.79 and through this uptrend line here, and perhaps keep moving down to the next support level, which we identified on the daily chart as around 104.10, I believe. Well, I'd like to thank you for taking a little bit of your time to take in this little video blog. I hope you got something good out of it. And I just want to remind you, we are not an investment advisory service, and we are not recommending that you buy or sell anything. All the examples shown on tonight's videos are for purely educational purposes. However, if you do decide to buy or sell anything for your portfolios, good technical analysis is your best bet at having successful trades. And with some of the tools available from Jan Arps Trader's Toolbox, you have the best technical analysis available to you. So with that being said, may the trend be with you.